Now, Uttam Tibrewal joins us, President and Executive Director of AU Finance Bank. So, Uttam, good morning. Thank you for joining us. You become listed today, which means more scrutiny, and television journalists like me would be quizzing you more often. So, I'm sure you prepared for that.
Thank you so much, first of all, calling me here. We are working for last 20 years, and we have been regulated by RBI also, earlier also. So we are responsible guys and ready for that. Not a problem, please.
Okay, wonderful. So my next question to you is that your stock is up 50% after listing. Are you slightly sad that you merchant bankers never got you the right price? I mean, you could have raised 40% more.
So we have just over with this NSE ceremony, and very honestly speaking, I have not followed the price, and I'm not going to follow the price, because price is an outcome of our working, hard work and conviction. So we'll keep on focusing on our working, and price will follow. I can say that.
Okay. Uttam, hi, morning. Congratulations once again. Been a very positive response as well that you got from the investment community. Tell us what really is going to be the strategy at AU Small Finance for, say, the next 5 years. What are going to be the growth drivers for you from here onwards?
Thank you so much, first of all, calling me here. Thank you, India, for giving us this opportunity on this platform. We never thought of coming to this platform. So slowly and gradually, one thing led to another, and we came to this dais. So going forward, we have a history of 20 years. You can see our growth. We are growing for last 30-40% CAGR continuously. And we are into the hinterlands of India, real financial inclusion into the villages, semi-urban area, which RBI wants. That's why they awarded us a small finance bank license. And going forward also, I'll keep our focus to these hinterlands, villages, financial inclusions, those people who are not access to formal credit. They do have an income, they do have an intention, but they don't have access to formal credit because banks doesn't lend them, because they don't have a documented income. And for over the last 20 years, we have a niche to assess them, go to them, see their businesses and fund them, and we can available to collect also, because as you must be knowing that we have the best delinquencies of the industry. So going forward, we'll keep strategy. We are not changing ourselves. And going forward also, we'll expand and do the same financial inclusion like this.
Now, you know, you managed to grow at an impressive growth rate, but that's also because your base was low. Can you grow at your historical run rates at a large base? Because if you're growing at 30%, which means in less than 3 years, your balance sheet size is doubling.
See, you know, presently I'm present in 10 states, predominantly Northwest, with the 300 branches of network. We were an NBFC. We were only lending that time. I was non-deposit taking company. My money was coming from financial institutions. I have a base of 3 lakh customers to whom we have lent as a vehicle financing or MSME, SME. And you can understand, as I become a bank, I'm exposed to CASA, TDs and all kind of banking financial needs of customers. If I'm able to serve my existing customers within this area, within this geography, coming years, and as an NBFC, we have some constraints to it because my cost of borrowing was higher, so I was able to cater one segment of customer only. Now I'm exposed to all kind of customers, you know, the whole gamut of customers open to me. So I think growth for AU per se, going forward also, I don't see any challenge. I think we'll surprise the market going forward. Quarter to quarter, we'll give you a report.
Okay. If I look at the experience of other NBFCs and microfinance, not NBFCs, which have just got a bank license, their migration is coming at a cost. And I'm simply using the industry example for benchmarking purposes, whether it is Equitas or Ujjivan. The transition from being in microfinance to bank is coming with some, it is coming at a cost, and it is coming at the cost of growth. So when you'll migrate to become a small finance bank, or when you'll migrate to become a bank, what could be the process of transition? Will that come at the cost of growth?
You need to go into the insights. You know, out of 10 licenses RBI gave as a small finance bank, you can see that I'm the only company in NBFC who is asset financing company. You know, all rest are, one is local area bank, and rest all other are mostly predominantly into microfinance companies, that is basically unsecured, and my whole book is of secured. So as of now, there is not an apple to apple comparison. But as you said that compromising on growth, I can say that maybe 1 or 2 years here and there, because we are transforming ourselves. We built a huge infra, we have built a huge IT, best of the ITs of the world. So give you the best experience, customer experience to the market. So I think maybe 1 year or 1.5 years is hardly matters, because bank platform is a perpetual platform, and we should have a long-term view, 5 to 10 years. I don't see any challenge, absolutely no challenge. We are thrilled, and I think very excited to go forward.
Right. Uttam, okay, congratulations once again, and thank you so much for taking the time out and chatting with us.
Thank you so much for calling me. Thanks for all support. Thank you.
Okay, great. Well, so far so great for AU Small Finance. It's listed at quite a bit of premium. It's holding up very, very smartly in trade. But let's